Hello everyone, welcome back to the post market analysis for Tuesday, November 18, 2025. So let's discuss what trades we did today and how was our expiry day for Nifty. So today our pre-market view was buying. I had a strong buying view today regarding Nifty, but as soon as Nifty opened and this first kind of candle jumped in right at the start, and this huge candle made things worse for me. So I'll just explain you what happened. So right after this candle, huge red candle, which I was not expecting, since the open was above 26,000 levels here, it opened here, but then the first candle it dipped down. I had a strong inclination towards it actually coming down to this support levels, which were of previous day, around 25,920 levels. So I thought of entering in puts, and when I opened the 26,000 put chart, the first candle only, it had it had risen till around 86 and then gone and made a high of around 100, and then it was retracing. So the huge mistake which I made was, in in such days when the first minute tick candle is huge red or green, avoid not avoid trade after range break only. So what I did was I entered too quickly here, and that basically caused my stop loss to hit. So I entered around 92 levels and my stop loss was 81 levels. So I entered at around 915 and my stop loss got hit at around 922, as you can see here, right at 83. And I entered here. So initially I entered around 450 quantity, and I also thought a couple of times here, around 2-3 minutes, that I should exit at cost and this trade is going to retrace. But then I was like, let me respect my stop loss, and then I gave my stop loss. So instead of doing this, I should have just waited around this level. Not even, I'm not saying till 9:49, because my setup is to make entries within the first 15 minutes. So even if I would have made an entry around here in this up move, right after this base formation, so if this would have been a perfect entry which I would have captured, even plus or minus 5-10 points would have been all right. Plus or minus 5-10 points easily would have been all right. So what happened was, if I had entered at 80, my stop loss would be around 69 levels, and 124 my target would be hit in easily, like around at 10 o'clock. So this was my mistake. So this is my huge learning for the day, guys. So I hope you also learn from this and don't repeat it, right? And yeah, so basically what happens such days is you have to control your emotions and wait for the candle range break. So this range of the candle was broken around here. Even if you entered here, it's all right. So yeah, this was it. And so we booked a loss of around 10,000 in this. And then the second trade which we took was our expiry gamma scalping move, right? So we are doing long gamma, we are playing long gamma on Nifty expiry and Sensex expiry. So today is the first day we did that, right? And we'll do this across first day today, and we will do this experiment across next 5 Nifty and Sensex expiry respectively. So first Nifty expiry, loss, right? So 2, 3, 4, 5, you have to do it 5 times more. So what I do here is simple. After 1 o'clock I just buy 5 rupees premium of call and put, and just keep a target of 4x for both, 4x or 5x. So today I had kept 4x since it was the first day, or else you can keep 5x as well. So my main intention behind this is to kind of take in the long gamma moves which happen on expiry days. So let's say I am risking 10 rupees per expiry risk, and since my target is 5x, so ROI is 100% if target hit, right? So even if this 5 rupees goes to 25 rupees, so I earn 20 rupees on this net and I lose 5 rupees here, right? So I have earned 15, right? So it's almost 150%. But if I exit at 20, then it's if I exit at 4x, then it's 100% ROI, right? So even if I get it right, so today I lost minus 10. Next expiry, let's say I earn around 20 rupees here and lose 5, 15. Then next expiry I again lose 10. Then I again earn 15 and 15, so which is equal to 30, 45 and 25. So I earn net 25 rupees, which is a great thing because my risk is only 10 rupees. So around 250% is my return, right? Oh, and if this happens successfully, I may also increase my targets to 8 9x, and then maybe I have to catch little higher premiums. Yeah, so this is just I put extremely small amounts of capital in this, and this is just an experiment which I think is successful if long gamma keeps on working, because what happens is on expiry days option sellers create this huge concentration around strike prices. Like you can see, there's a lot of OI concentrated, and to kind of ease that out, there are long gamma moves, and these are mostly observed after 2 p.m. So you can check in Nifty last expiry, similar thing happened, and long gamma got people who were short gamma, they got crushed very badly. Yeah, so last Tuesday was the 11th of November. So as you can see, last Tuesday also we opened like gap up, and then continuous red candles. It formed a base, it broke the base, it again came in the range, and then it started making higher highs. And I think, yeah, it also broke the day high and crossed like crazy levels here and closed above. So this was a pretty brutal gamma move. And even till 1 o'clock, if you hadn't entered, even if you would do this here, at after 2 p.m., as you can see, there was another move. So these moves, you can see, these don't seem much on the spot chart, but on expiry days after 2 p.m., when there's just 1 hour 15 minutes left for the market to expire, these moves account for a lot of things, and they take your options from 5 to 40, and 10 rupees options from 10 to 80, and so on. So as you can see, this is a 0.34% move, right? So yeah, these are some things which I'm currently working on, and this was today's post expiry analysis. And yeah guys, so today I made a huge mistake, as you can see, and please learn from it that only enter after the first candle range is broken, right? Or after you see some kind of a base formation in the direction you want to trade in, right? So when I saw this base formation, I should have entered around 80 levels. So I got multiple opportunities to enter around 80 levels. 1 2 3 4 5, around 5 opportunities to enter around this level. And then the stock kind of the option kind of took off in my direction, right? So today my entry was wrong, which is okay, since we are trading a positive expectancy strategy. These things happen, and we just have to focus on getting those big wins, and just staying consistent with booking those small losses and not over trading after this, right? So if we keep doing that, we are in the positive. Yeah guys, so that's it for today. For tomorrow, I will be looking for buy trades only, because the rejection you're seeing here is not much rejection, and since we are trading at all-time highs, my bias would be buy side. It depends. My bias would be buy side, since by this down move all the buyers would have exited, and maybe some sellers would have come. So naturally the market, I am expecting it to move up to get the seller stop losses, and then since it is at all time high, a gap up or a flat and then a up move would be more preferable for me. In case of a gap down, I'll wait and watch and then see what to trade. Thank you so much for watching this video guys. I'll do this post expiry analysis daily, and also try to record live trading videos, and kind of show how exactly the strategy works. You can watch the video for this momentum strike strategy. I've uploaded it, and if you have any questions, please comment, like, share and subscribe. Thank you so much guys.